Hello and welcome everyone to our 7-month PMS live stream. Thanks a lot for joining us on this Sunday. And I'll start by saying happy birthday to Harsh, who has informed us that it's his birthday. Um, so glad to have everybody here. So this is a special live stream, right, Siddharth? We have
Yes, correct. This is a very special live stream. We have very interesting updates to share with everybody, and Sonam will be launching something as well. Uh, so over
yes,
to you, Sonam.
definitely. So something special for our PMS audiences and a lot of updates from our sites on how we are looking at the market, what is the outlook, and how the allocations are shaping up in the PMS, right? So should we wait for a little bit for some more people to join in?
Yes, I think let's wait for a minute or so that more people can start, joining in, and then probably you can start.
Definitely.
Sure.
Yeah, so how is the Sunday coming along, so that?
Yes, it's coming good. We recently did a PMS, close session with our PMS client specifically. So that was a good session, and it's always nice to be speaking to our audience base on a Sunday. So super excited for this, and I'm very excited for the launch as well.
Yes. Yeah, so like Siddharth said, that last Friday we actually hosted a closed session for uh, only the investors into the PMS, and it was a really interesting thing. So many people joined in, and I hope that more people will join this community of investors who are investing into the PMS, and we'll host more such sessions. So without much ado, let's start. Right, I think fair number of people have joined in.
Yes.
Yes, all right. So, what is the special launch that we are doing? Any guesses you guys can put into your chat window? What do you think we are going to launch? Um,
People are expecting a new product.
Unfortunately,
We
there's
started.
not a new product,
Yeah.
but something special. You guys saw us launch the whole website redesign around a couple of weeks ago, and now, especially for the PMS audience, what we are doing is we are introducing to you a new look and feel for the PMS website, which is black and gold. We're calling this experience Right Gold. And, the idea is to create a more premium design with premium design elements for our PMS audiences. So, if you head over to the right website and you go to the PMS page, you will see the whole website coming up with a new black and gold design with a lot of premium design features. There's a lot of 3D elements and all of that, which designers have specially worked on. And the idea is to showcase, this premium product as a special offering for our investors. Uh, so please go ahead, have a look at what we've done, and we are very very happy to share that with you guys. And that is the launch that we have. That is the special thing that we did. And now we'll do a quick presentation about what's happening in the market, what's our outlook, and then we'll take some audience questions. um, so before we move on to the outlook, here's a snapshot of the PMS. We are close to 45% in returns in 7 months of the launch. We are close to 110 crores in AUM, and the PMS has done really well in most of the months. Obviously, there has been volatility in the market recently, and that is going to be the key topic that we touch upon. But we are very prepared for whatever could happen in the market, and we're quite positive about the long-term outlook. We have these three schemes in the PMS that you guys are aware of. The Right Factor Fund, which is our best performing product. This is a multi-factor strategy It has given 44% returns in 7 months since inception, which is quite good. We have outperformed the market by 25%. Along with it, our right momentum strategy, or right factor hedge as it was called, has also done well, outperformed the index. And our right alpha fund, which is the high risk strategy, has done increasingly well, has seen some correction, like because it is a high risk momentum strategy in the last couple of months. But we are very, very positive over the long term outlook, and we see it recovering very sharply from the drawdown that it is in. So this is a snapshot of the performance of the three strategies in the last 7 months. You will see that we've beaten the benchmarks most of the times. We have done increasingly well, in different market scenarios, and we are quite prepared, like I said, for the current market volatility. So talking about the market volatility, let's quickly go over our overview of the market, right? See, everybody saw whatever happened last week, and it is a little bit of a worry. So, big question that people are asking us: is it, you know, the right time to invest? Are these small and mid caps actually becoming under super overvalued? And should we not invest? Should I close my small cap exposure? So, those will be some of the things that we'll be covering in this session. So, to talk about the current scenario, let's look at the performance of the different buckets in the last 1 year, right? So, on the NSE, if you bucket stocks based on their market caps, what you will see is that the smallest stocks, right, the 400 to 500 bucket, is the one that has risen the most and much higher compared to the large caps. And this is, something that happens in a bull market. Whenever the markets are going through a bull phase, you suddenly see that small and mid caps are growing fastest. There's a lot of money being pumped into the market, and when money is being pumped into the market, the money reaches the small and mid cap stocks, and because of their smaller size, they end up growing very, very fast, right? And that's why you see a sharper returns coming from the small and mid cap segment. If you look at the valuations, right, how the valuations of large, mid, and small are comparing to their historical average, what you will see is that the small cap stocks are the ones which have reached a very high valuation, right? So comparing valuation across, last almost 10 years, you will see that 2017 was a peak of valuations for small and mid caps, and the current levels are touching close to that peak, right? And that is why I think there is a little bit of a warning floating around into the market, that is there as overvaluation in this segment, right? And in comparison, if you see that the valuation of large caps are in fact lower than the valuations that we had last year, right? So that segment is not seeing those warning signs, but yes, small and mid cap definitely are seeing some warning signs. And what is very interesting, and this is the blog also that we sent in today's newsletter, that there is a very interesting phenomena going around, that the low float PSUs or the low float stocks are growing larger than the high float stocks. What does that mean, right? So Siddharth, here low float means that any stock that has very small number of shares available to the public, right? So
Right.
let's say there are 100 stocks. If the stock has less than 15 shares available to public out of the 100, then it has a very low free float. Whereas if the stock has more than 15%, it has a fair bit of shares available to the public. So typically stocks that have very low float, whenever there's a, lot of buying in the market, lot of euphoria in the market, you will see that they tend to rally the most, right? Because very small number of shares are available to the public, and there's a lot of demand that's coming in. And that is the phenomena that we have seen in the last 6 months, that suddenly low float stocks. So if you compare, low float PSUs versus non float PSUs, you see there is a big difference. Similarly, non PSUs also have a lot of differential. Low floats have risen more than non low floats. So that means that there is a lot of demand that is out there in the market. And this phenomena typically people have seen in slightly, euphoric markets, when the market becomes, tends to discount all valuation, and there is a euphoric buying. And this is what leads to a little bit of a froth in the market. What that froth means is valuations have been ignored, and uh, there is a chance of correction. So if you look at these numbers, you would see that there's an expectation of correction in the low float stocks, and that is what we saw in the last couple of weeks, right? So if you look at the small cap index, you would see that it has in fact corrected almost 15% from the peak, right? And that is because there is a correction of valuations, right? That is happening. There is a warning that came out from the SEBI chief. There's a lot of speculation in the market about overvaluation, and which is why I think the valuations have corrected with the correction that happened. And in fact, like we were hypothesizing that, low float are the most overvalued, you would see in the last 1 week, these are the stocks that actually corrected the most, right? What that means is that the valuations are actually correcting themselves in the current rally. So, obviously, there are a lot of rationales behind it. If you look at value for these segments, you will see low float have the lowest value, and the non-PSU, non-low float have the highest value. And obviously, the warnings that came around that led to the correction that happened were, there were a lot of reasons that people are trying to find out. One is, the day SEBI chief came and said ki there is a froth in the market. That is when we saw the sharper correction. Similarly, mutual funds have been given warnings on the small and mid cap exposure. They have stopped taking, some of them have stopped taking new funds, right? Some of them are, a lot of them are putting out these stress trades which looks scary. So that is one of the reasons why people are checking for valuation. Another rationale that is coming around is the tax planning in March. People are booking losses to reduce their tax liability. Also, if they made a lot of profit, they might need to sell stocks to pay the tax. There is also, a lot of other speculative news in the market. Like there is a betting case around the stock market that was exposed, which scared people. And the RBI actions against NBFCs also had some impact on the market. So while there are a lot of reasons, these small reasons for the correction, there is no big warning as such, right? Not yet is there. So when we looked at 2017, or we looked at 2008 or 2020, whenever there was sharper correction, there was a reason behind it, right? There was some big uh, crisis that led to these corrections. So there is no crisis right now. Let's be very honest about it. This is just an organic correction based on valuations, which is very fair and healthy in the stock market, right? Stocks at the end of the day represent certain value, and as long as the prices are moving towards the value, it's a very good sign, right? And obviously, elections are coming around. That is the big event, that will have a big impact on the market. Again, there's a lot of analysis and speculation that has happened. And but you never know what happens, and we are not actually very well qualified to comment on the election results. But what we have done is we have analyzed the returns and volatility of the market before the previous historical elections. And what we see is that small caps tend to underperform large and mid caps in a run up to elections, right? So I think that is one more phenomena that is playing around, which is why we might be seeing this correction. So that is more or less about our understanding of the market. We think this is a healthy correction based on the valuations in the market. And there are a lot of speculative risk events that are coming, like the elections. And so right now we definitely think that we have to be safer in our allocation. Plus, we have to diversify and reduce the risk across our strategies. But for sure, there is no huge event, right? There is no huge crisis event that is leading to this correction. And which is what we have to understand. This is right now the stock market quite healthily correcting itself. It's not like a massive warning sign that we have to be, really concerned about. Let's talk about the outlook from these levels. So, how are we looking at the market right now? So, definitely most of our strategies have gone into the risk off mode, right? So we typically have, something called a regime model where we talk about risk on, risk off, right? Or a bullish or a bearish market, right? So right now our models are saying that, we might have entered into a slightly bearish zone, and therefore we have to, what we are seeing is that we have to be extremely careful in terms of valuations, right? Valuation is something that we have to be very aware of, and make sure that we are looking at valuations, especially in the small and mid cap segment, before we allocate. Second thing that we think is very prudent right now is to limit the PSU exposure. Somewhere in our strategies, we've had instances where the PSU exposure has gone beyond a certain level. So we have put a limit on the PSU exposure, and now we modified the model to limit PSU exposure. Then that's why over the last month or so, you have seen some reduction in that exposure. Also, our outlook right now, like I said, is risk off. It is a little bit conservative, and the exposure across our strategies has moved towards large caps, right? In terms of risk management, we are very, very careful right now in terms of risk management. So we are using all the tools that we have at our disposal to manage the risk. In terms of where are we seeing focus, right, in this market, we've done this analysis again based on data only, because that's what we do. And we see a fair bit of value coming, or stability coming from the banking segment, from the consumer segment. Metals and mining is looking good. Similarly, oil and gas is also looking good. So these are some of the sectors that are in focus right now. uh, Now let's quickly go over how we do risk management in our PMS, right? So in our PMS, like we keep on saying that it's not just one factor we're looking at a number of factors, right? And why, in fact, we are doing that? Because all of these factors give you differentiated or uncorrelated sources of returns, right? So if there are uncorrelated sources of return, then your aggregate portfolio, when you combine the different factors, comes up to have a slightly lower risk. So, diversification is one key thing that we have in our strategies. We always diversify across sectors and industries. We never take a concentration bet on any one particular segment, right? Similarly, we have a lot of risk management in place in our strategies. So there is a AI-based forecasting model which forecasts the risk in the market. When the risk in the market looks high, we reduce risk in our strategies. When the risk looks low, we increase the risk into our strategy. So right now, as you can see, the model is seeing slightly higher risk, and that's why we have deallocate a little bit into the PMS strategies, and we are playing it a little bit careful. And we are quite sure about the strategy's potential in risky markets also. So you will look at these couple of instances. One is March of 2020, one is 2021-22. In both of these instances, we saw that the whenever there was a lot of volatility in the market, the strategy has outperformed the market. And typically, in most of the years, the strategy has a lower risk in comparison to the market. So that is why we are looking at the risky scenario also quite optimistically. Now let's quickly go over where the allocations are in our current allocations, right? So first is our factor fund. If you look at the factor fund right now, you will see that we are holding more than 15% or around 15% sort of cash in this strategy. There is a fair bit of allocation to the finance and banking segment, consumer segment, and some automotive stocks. Our allocation is largely in the large caps right now. Mid caps have a small allocation. Small caps literally have no allocation in the strategy right now. In terms of the momentum fund, you will see that again, we are holding fair bit of cash. Allocation is in ITs, refineries, autos, etc. And the small cap stocks have very low or zero allocation in this strategy also. In our alpha PMS right now, the cash allocation has gone high because in the PMS, what we do is we do uh, tax loss harvesting also. So around the beginning of last week, before the crash, we actually sold the stocks where we have are making losses so that the tax liability goes lower for our investors, and then we have not bought back into the market yet. So we are holding a lot of cash in the alpha strategy right now, and that is more or less all about the PMS allocation. I have closed this presentation dot on the 20-minute mark. And now let's go over to the questions. Before we go there, please do go check out our PMS website. We have put in a lot of time and effort in designing it. You will see, all our different portfolio pages have been redesigned, and we worked really uh, a lot on the theme as well as the design element. So you will see a lot of these 3D sort of elements, which is a little premium in terms of the design language, and the team has worked really hard in designing this. So with that, Siddharth, let's move over to the Q&A, right?
Yes, of course. Thank you for the presentation, Sonam. And just to share an update, I did put a poll, and everybody is loving the new premium feel of the rebranding that we've done. So moving forward to the questions, I'm clubbing this question up because it's coming up from a lot of people. They want to understand the difference between the PMS Alpha Fund and the Small Case Alpha Prime. So can you share some light on that?
Yes. So see, both are concentrated momentum strategies, right? Like we are all aware, but they are run independently as different, strategies. And once in a while, there is a overlap of a few stocks between these two strategies. But like I said, they're independent strategies. So there's a differentiation. What happens with the PMS is that PMS, we can be more active, we can rebalance during the weeks, we can manage the execution, and so a little bit of active element, which is very favorable in a risky time, or in capturing opportunities early. That edge comes because of the structural difference between PMS and the advisory space. But the how the portfolio, the rationale, which is concentrated momentum, is actually the same across both of these.
Right, right. Perfect. Thank you for that. So the next question is from Mr. Deepak. He's asking, when do we expect a rate cut, and if so, how will the market shape up? With the start of the rate cut, will there be another bull run? What are your thoughts on that?
No, definitely. I think for that we can, there's a website that I actually watch. I think this it's not working that well right now, but there is something called a Fed Watch, right? So if you go to that website, right, you will see that the possibility of rate cut is not there till June, right? So in May and in March, nobody is expecting a rate cut, but there's a possibility happening somewhere in June. But that changes as the commentary changes in the market. So we are looking at June uh, to be the month when the rate cuts happen, and that is when the election results will also be out, right? And I think that is when we could see much more relief and clearer direction happening in the market. Definitely, if the rate cuts happen, there will be, growth will obviously increase in the economy. Banks will have a great time, as the lending business will grow, the credit will grow. Similarly, real estate, people, you will see people buying more houses, more cars, right? And so that will bring in a lot of growth into the economy, which will be a huge positive. But then, when does that happen is something that depends totally on the Fed's decision, right?
Right. Absolutely. Uh, So the next question is from Mr. Abhijit Patil. He's one of our esteemed PMS investors. He's asking, I've subscribed to the Wright PMS hedge fund, and I'm yet to see the benefits of hedging or options in the portfolio. So some views on that.
Yes, Abhijit ji, I think, see, for the hedging, like we say, it is more like an insurance policy. We are buying these long dated put options. We're not trying to gain from the theta at all. We are trying to, just hedge towards the volatility which happens in a bear market, right? So we are buying puts so that if the uh, correction is sharp, you will see the IVs increase very sharply in these put options, and we can hedge our strategy. So this scenario, typically we are looking at the VIX levels, right? And based on the VIX levels, we'll buy that hedge. See, right now, if we hedged our current portfolio, which has a small and mid cap exposure with the Nifty, you would see that it would have had a negative sort of a performance, right? Because the VIX levels are still very low, right? People expect them to rise, and when they rise, we will probably step in with the hedge. But right now, hedging it with the Nifty wouldn't have actually made a lot of sense, because you must have seen that large caps have in fact done better than small and mid caps, right? So given that, we are definitely watching. We have whole setup in place. We are ready to deploy. We have some amount of cash sitting in our hedge strategy that can be deployed with a moment's notice. So, we are quite prepared for that.
Right. Perfect. So the next question is from Mr. Ansh. He's asking that can we switch between the different PMSs schemes offered by you?
Yes, we can switch, but whenever you switch any of your investments, be it in PMS or otherwise, you end up selling and buying. So you are paying a cost, plus you are booking the profits, which will lead to taxes, and there is a little bit of a uh, tax outlay that is involved. So that is why we typically do a discussion with our customer base. When somebody says that I want to switch, we would get on a call with you, we'll have a discussion, and only when it makes sense we'll do it. We've done it for a few people, and like I said, we'll do it only when it makes sense.
Right. Perfect. The next question is from Mr. Prashant Sharma. He's one of our esteemed PMS investors as well. He's asking, with the markets at highs and pockets of froth in small, mid, and micro, is it possible to move all SIPs into liquid debt fund only and then deploy on corrections rather than just going straight in for deployment?
No, definitely, Prashant, that is what we are doing. So in the last week, any cash that has come, right, we have in fact not deployed much of it. We are not allocating to the stocks that are overvalued right now in our portfolio. We are only allocating to the safer zone. And yeah, I think we will take our time in deploying the money that is sitting in cash right now. And even SIPs will not directly just push into the market. We are looking at the situation, and I think when it's very clear that the correction is done, I think we are planning to send out a notice to our customers to also, maybe add more to the investment. And that is when we'll start deploying aggressively.
Right. Perfect. So the next question is around, is there a team that is making the decisions on the stock selections, or is it only you who makes the decisions?
See, there is an algo that is making the decision. I am not making all the decision. Me and the team is sort of working on improvising our system, right? So basically, our philosophy, which is coded into a system, is what we improvise on with time, and the system is what takes the decision. I think the advantage with our PMS is that it is a totally systematic thing, right? So I as an individual can have my mind change, right? From today to some other month, I could have a bias. But when you create a systematic philosophy, right, we have created system that we have rigorously back tested, optimized. So we have much more confidence of consistency, right, and us following the philosophy that has worked historically, right, and that is why we rely on the system, and the system takes the call.
Right. Perfect. So the next question is from Mr. Samidurai. He's also one of our esteemed PMS investors who's asking, do we have a plan to launch an AIF fund?
No, definitely we are sort of thinking about it, uh, right? But see, it is a little bit of an intense process with paperwork and all of that involved. We do want to do long short strategies, which are only possible in the PMS structure. So definitely that is on the cards, maybe sometime in the near future.
Right. Uh, Perfect. So the next question is from Mr. Anurag. He's asking, are the stocks in the small case and PMS the same?
No, not at all. The stocks in the small case and the PMS are extremely are quite different. So there is very little overlap between the two structures. They are run very independently, that's for sure. And there is no overlap that happens.
Right. So the next question is from Mr. Shiva. He wants to understand how we can optimize the rebalancing in alpha, like using stop loss. Is that possible? And he wants to know a little bit about how big the team is at Right Research.
Yes. So see, stop loss is a very interesting concept, which, Mr. Shiba, if you look at a bear market and you're applying stop losses, then I'll tell you it ends up being not the best thing, right? So I've seen instances of some quantitative managers putting very strict stop losses in bear markets, right? So you might be seeing right now that, one moment we think that, oh, PSUs are rising, next day there's a correction, right? So, if you bought PSUs one day looking at that rise, next day you will booking a stop loss, right? So in a market that is volatile, stop losses have to be, if you are going to apply, they have to be a little bit loose. You cannot have very strict stop losses, otherwise you'll be, hitting your stop loss every other day. So in our strategy, we don't have strict stop losses. We let the stock play out. If it organically goes out of the strategy, then well and good. Otherwise, we rely on. We have typically seen that stocks that have big warnings who are correcting, they go out of the strategy. But otherwise, we let the system decide.
Right. Perfect. So next is a very interesting question from Mr. Aishwarya Gupta. He's asking, I'm exploring investing through PMS, currently only investing through mutual funds. He's willing to take the risk for the performance. So what are the
Hmm.
deciding factors when he would want to choose a PMS, and are the backtested numbers really reliable?
Okay, so very interesting question. See, I think what are the factors? See, the advantage of PMS compared to the other structures. See, these are SEBI-defined structures. I think, as an advisor or as an investment manager, if I get to trade on your behalf, then I could do much more, right? Similarly, and that is the thing that we are able to do with the PMS structure, right? That we will take the decision, we will do the buy and sell whenever we see the right time. Otherwise, we have to send you an update, we cannot be very active. So that is the advantage that comes with the PMS. It is very convenient also. You put your money, you have to forget about it, you can come and check once in a while what happened. And I think we have a very strong strategy, right, that can deliver very good long term performance. I think that is a bet that you could take, to let a professional manager work with a strong strategy on the portfolio, and you let go of the sort of active thinking and stress that you have to take on managing your portfolio. So I think there are a lot of advantages with the structure. And I think, what was the second question, Start?
So his second question was around, are backtested returns really reliable?
Yes, so I think that is also one very big question, right? So for us as quant managers, see, when we take money, and which is very large amount of money from our investors, uh, and we show you a back test, then if the back test is not reliable, then we will not have confidence to show that to you or to operate with it, right? Fortunately, we've been running strategies in the Indian market for the last 4.5 years, more than 4.5 years now, with the small case structure. And what we have seen is that our performance always matches with the back test, right? Our strategy stayed true to the back test, and that is what is beneficial, or what is the positive, right? So and we have not outperformed the backtest by a wide margin, neither have we underperformed the backtest by a wide margin. We have stuck very close to the backtested numbers. And yeah, I think we are very confident about our backtest, and the most of the effort that me and my team do is making sure that the backtest is as reliable as possible.
Right. Perfect. Thank you for that. So the next question is from Mr. Guna Shekran. He's asking, what is the PMS, stock universe that we are looking at? And is there flexibility of customizing fund allocation, say 50% factor, 50% alpha?
Yes, so Siddharth, we look at the top 500 to 700 stocks. We don't go to very small stocks because there's not a lot of data available, and we are data driven. So typically, you will see large, mid, and small caps, but not extremely small stocks. Uh, and the second
Yes.
question is,
And his second question is around customization of the fund allocation, say allocating 50% to alpha and 50% to factor on the PMS. Is that possible?
No, definitely. We can do that customization, and typically we do a call just before the deployment with our clients where we have a detailed discussion and decide on where the allocation should go. So we can definitely split it between different schemes. Another advantage that we have with the PMS is that we are able to also stagger your entry, right? So some, let's say you had, I'll tell you about the PMS experience till now. Uh, let's say 4 or 5 months ago, if people put in money, we were very happy to allocate it on day one, right? We wanted to put it into the market as soon as the money came because the market was rewarding uh, the strategy with so much performance. Right now, when there is a lot of volatility, we are staggering it, like Prashant asked, right? Ki any new money that comes in, what we'll do is we'll not just immediately put it into the market. We stagger it. We are looking at when is the best time to enter, and that is when we'll stagger the entry, right? So I think that customization also comes up with the structure.
Right. Perfect. So, what is your perspective on the importance of international equity in an investment portfolio? Do you recommend allocating a portion to US stocks? And do we have anything on international equities when it comes to, investing itself?
No, definitely. I think international equity is again a diversified exposure that you can add to your portfolio, and we've seen in the past year that foreign stocks have done really well. So why not have some allocation? You could go up to 10-20% of that in your portfolio. Uh, we do have some international strategies. We are working on more, right? So there is a international stock momentum. There is a we have done ETF based strategies before. International stock momentum is something that we have thought a lot about, and we're working on it. But there is no particular structure through which I can offer these strategies. So maybe once we have a AIF or FPI or something like that set up, I think will be much more. It will be much more easy for us to offer those strategies to our clients.
Yes.
Hmm.
Awesome. So the next question we have is from Mr. Arvind. He wants to understand how do we manage the expected volatility, specifically in the PMS,
Mhm.
possible downside risks, and are we expecting any corrections in 2024? So if so, how do we sort of plan to manage it? So more around volatility and risk management in the PMS.
Yes. So in our PMS, we definitely do have a lot of risk management. Like I said, it starts with diversification. Then there is a asset allocation component that kicks in, right? So the allocation to bond ETFs or gold ETFs comes up whenever we see volatility in the market. And that is happening right now, to be honest. Similarly, when there is even high risk, then the cash call come in, right? So it's all built into the strategy, right? We don't have to take a manual overlay. We built it into the strategy कि, okay, when the situation looks a little bit dire, when there is a lot of volatility, there is a lot of warning that the strategy can calculate, it will go into the cash also, it will go into the safer zone also, and that is deeply inbuilt into the strategy. That is why, like I said, we are confident about the bear markets as well.
Right. Perfect. There's an interesting question from Mr. Shivarama. He's asking, why should I invest in any Wright Research small case of PMS when I can get almost same returns via mutual funds?
No, I don't think that. See, there is a lot of benefit with the PMS structure. Number one, it can be much more flexible in comparison to a mutual fund. Mutual funds have a lot of constraints and rules and regulations by SEBI, which is not there with the PMS structure. So we end up having much more flexibility, and that is why we are able to outperform. And specialized strategies are much more prevalent in PMS, right? So any PMS that you would see is active and people are offering differentiated strategies. I think that is the benefit of PMS, and that's why we expect the PMS to do better than the mutual funds. Second thing is that especially for the right PMS, we are very small right now, right, compared to the broader market. So even if you are looking at a larger PMS, you will see that Wright Research right now can do a lot more because of our smaller size in terms of flexibility to allocate at different places, to cut allocations, do the risk management much better than the larger folks.
Right. Perfect. Just to keep everything in the interest of time, we'll take up two, three more questions and then would love some closing comments from your side, Sonam. So
Mhm.
the next question is around, the allocation in the PMS. What type of allocation do we have on a market cap basis, whether it's large, mid, or small? And what's your opinion about that?
Yes, so I think we showed this that most of our strategies are sitting on a lot of large cap exposure at the moment. And yeah, I think we have a fair bit of large cap exposure. And it's not set in stone that we're not going to buy small and mid caps now, but we do have cash. And eventually, when we allocate, we could see more different segments coming in. But yeah, we do have a fair bit of large caps right now.
Right. Uh, Perfect. There's a lot of question coming, in terms of uh, the differentiation among small case and PMS itself. So if you could just give us one differentiation,
Hmm.
that would be great. Why should
See,
somebody choose PMS over their small case investments? Yeah.
yeah, see, I think PMS is a managed account and small case is either research or advisory, right? So in a managed account, we do full end-to-end management for you, right? So a lot of headache sort of goes away of rebalancing. Second thing is that we can end up being much more proactive because I have control on how to execute, right? I don't have to go to get an approval from the client. We can act uh, actively in the market. Let's say a risk event happens, or some opportunity comes up that looks very interesting, we can participate much more actively. And this is especially useful for the larger ticket sizes, this structure, because we also get to optimize a lot on our execution. So another big news that's coming up from our side right now is that we've been relying on some brokers who've given us very good brokerage, and we use broker algos to execute right now, right? We use slicing algorithms given by the broker to execute right now. But recently we've got Zerodha coming up with a very good pricing for us, and we'll be creating our own execution algorithms into the market that will even enhance the performance in the PMS.
Right. So the next question is from Mr. Shekhar Ganeshan, one of our esteemed PMS clients as well. He wants to know that we have products in the algo strategies, like
Mhm.
statistical arbitrage, option momentum, theta decay. Can you talk a little bit about this and who are these strategies suitable for?
Right. So Shekhar, these are derivative strategies, leverage strategies. We put in a lot of effort in creating a hedged exposure. But what you have to understand is you're taking essentially four times risk on your money, right? So you put in 100 rupees, I'll take an exposure of 400 rupees into the market, and the correct, if there is so there is leverage involved. Um, what we have done is structured them in such a way that they're very hedged in their exposure, and we get a much more consistent returns out of it. We have a equal long and short exposure, so very less correlation with the market and optimal and consistent returns in bull and bear markets. So we do have these strategies. Unfortunately, there is no perfect structure for us to offer these to our clients right now. We like somebody asked, will you set up a AIF? I think when we set up a AIF, it will be easier for us to offer these strategies. uh, right now we are running it on a few individual accounts and on ad hoc basis. And yeah, I think eventually we plan to launch them in a good way. But I think if you have a hedge strategy in the derivative market that can operate consistently, then it can be a very differentiating. It's like an FD product, FD like risk, but with a higher return. So it's a great product for people to have in the long term.
Right. Perfect. So just one last question, and then we'll take some closing comments from you. Uh, a lot of investors are concerned about alpha prime small case, given the
Mhm.
volatility we are seeing. So can you just share some light on, what's the outlook when it comes to rebalancing the portfolio itself and risk management for alpha prime small case specifically?
No, no, I think, see, that's a very fair question. We've seen a fair bit of correction in that strategy because of the exposure that has been there in the PSU segment, in the small cap segment. And, we've kept on saying that it's a high risk strategy. And that is what we are seeing right now. Obviously, we have cut that exposure. You've seen some of the large cap names already come into the portfolio, but the volatility in the market has escalated, which is why we're seeing some impact. But yeah, we'll be taking the necessary action, be it the allocation, be it shifting towards safer stocks with the strategy, and really managing it really well.
Right. Perfect. We've tried to answer most of the questions that were kicking in, and the investors were, sort of sharing with us. Uh, what we would love to know is your closing comments for today's session, and also if you have any advice to give investors that, going forward, how should they sort of look at investments? That would be great.
No, definitely. I think it's a very interesting time into the market right now. All the stocks that gave us amazing returns are now seeing uh, checks on the valuation and some correction. It's a very interesting time. I think what we really need to do as investors in this time is to have patience, right? I think that is what I would urge people to do, because see, equity investing is a long term game, right? If you get bothered by any smaller term correction, you would miss out on the long term rally. So stay put, be patient. Returns might not just inflate or come back. We might not, if there's been a 10% correction, so it might not be that that recovery happens in a week's time. It could take time. Be patient with it. I think we are doing our most to switch our allocation, safeguard the capital, and do risk management. And I think in due time we will see the portfolio come back and shine again, right?
Yes, perfect. I think this was a lovely session. Just on a lighter note, Mr. Shekhar Ganeshan is asking, do we plan to merchandise the right t-shirts and the other stuff as well? So, would you want to share some light on that?
No, no, why not, Siddharth? We should think about it. And yeah, I think we should. These are great. All this designing that we have done, I think we should be merchandising this also.
Yes, absolutely. Uh, Perfect. So we've taken most of the questions. If we've missed out on any questions, don't hesitate to reach out to us. We are always happy to help. Any query, we have a separate customer support system where you can just punch in your questions. Moreover, we are always happy to get on calls, so feel free to reach out to us.
Perfect.
Thank
Thanks
you,
a lot,
everybody.
guys. Yeah, thank you for joining us on Sunday, and have a great week ahead. And we'll see you in the next month.